Hello, good evening, and welcome to pre-news trading strategies on Forex. During this webinar, you will find out how news events may affect the market, learn how to apply the best trading strategies, participate in a question and answer session at the end of the event. First, I'd like to start the session by giving you some information about me. My name is Ihab Jubail. I was born and raised in Egypt. I have a passion for financial trading as well as teaching. I have been trading for a number of years, mainly on Forex and commodities, and in recent years, I have also set up my own signal service and website. I host online webinars and seminars on investment and financial trading regularly, and I provide my service to subscribers worldwide. Now let's start the session on pre-news trading strategies on Forex. Scheduled economic news releases can generally be classified into four different categories: inflation, economy, infrastructure, and others. You don't need to be an economist in order to trade the news. All you need to know are what news releases are tradable and what to do before, during, and after the release times. You may find news trading a little boring, but please bear with me and try to use it as references in the future. Because if you do, you will start to see market setups beyond just news trading. You will become aware of market sentiment and eventually be able to take advantage of it. Let's get started. Yes, it's all about the interest rate. This is probably the most important tip in this section. All major currencies' interest rates are controlled by the government or an independent organization that answers to the government. The mandate of the government is to maintain and control inflation. If inflation is high, interest rate will be raised to slow down the economy. Higher rates mean higher cost to borrow money, higher cost on the monthly credit card bills, higher cost to buy a home, and so on. The economy will slow down, growth will be controlled, and thus inflation will be controlled. If inflation is slow, the opposite is done. Rates are lowered, borrowing will be encouraged, economy will be stimulated, therefore inflation will be higher. Every government's mandate on controlling inflation is to have what we called low stable inflation, also known as price stability by some other central banks. A low stable inflation of 3 or 2 to 3% per year is the ideal inflation result that most major central banks want. Another important concept to understand is that currencies are assets and their returns are earned in the form of interest rate. By increasing the interest rate, the values of the currencies also increase. So, higher interest rate means higher inflation means higher currency value, or lower interest rate means lower inflation, that means lower currency value. Since inflation is the single most important factor that affects interest rates, news releases that measure inflation are particularly important for the Forex market. The single most important news release for inflation is CPI, or Consumer Price Index, is also known as the true cost of living. In short, CPI is what the economists call the inflation number. CPI usually has a core number and a headline number. The headline CPI number, or just CPI, is a complete inflation number that includes everything. The core CPI number is the inflation number that excludes food and energy cost, which shows a clearer view on inflation, since energy and food cost may vary depending on season. Another important inflation news release is PPI, or Producer Price Index. Here we are interested in the input component. It measures the rate of inflation, or the rate of price changes experienced by producers when purchasing goods and services. When producers pay more, they are likely to pass the higher costs to the consumers. So PPI is thought to be a leading indicator of consumer inflation. PPI is highly regarded and at extremes will have a market impact equal to that of its CPI counterpart. Most PPI news releases are not classified as high impact news, but in extreme cases, a high PPI input will affect the CPI as a whole. Since if it costs more to produce a particular product or service, the provider will have no choice but to eventually pass on the cost to the consumer. PPI numbers are usually released before the monthly CPI numbers. Therefore, if we get a particularly high PPI number, it makes sense to expect a higher CPI release numbers as well. So always remember, a higher PPI means higher CPI means higher inflation and higher interest rate, or lower PPI means lower CPI equals lower inflation and lower interest rate. The economy is another driver for inflation. In short, if we have a better economy, we will have a higher inflation, a higher interest rate will follow, and a higher currency value will be perceived. On the other hand, if we have a deadfall economy, inflation will be lower, interest cuts will be considered, and lower currency value will be perceived by the market. News releases related to the economy are news that directly measures the growth of the economy, news that directly measures the growth of the job market, news that directly measures the housing market. News that measures the growth of the economy is GDP, or gross domestic product. The sum of the value added at every stage of production of all final goods and services produced within a country in a given period of time. GDP is the primary measure for the economy's health. In summary, if we were to reduce the entire economy into a single number, it would be the GDP number. GDP also comes in as core GDP and headline GDP. Core GDP is GDP without the transportation component, which varies from month to month. GDP is also related to retail sales figures. Retail sales measures the value of sales at the retail level. A rising trend has a positive effect on the nation's currency because retail sales make up a large portion of consumer spending, which is a major driver of the economy and has a sizable impact on GDP. Traders pay close attention to retail sales because it's usually the first significant indicator of the month that relates to consumer behavior. Retail sales is a very important leading indicator for GDP, especially in the United States, a country that consumes majority of its own production. Retail sales makes up about 2/3 of US GDP. So remember, a higher retail sales means a higher GDP. That means a higher inflation and a higher currency value. Or lower retail sales means lower GDP, means lower inflation and lower currency value. Other news releases related to the economy are non-farm payroll or employment changes. That measures the changes in number of employed people during the previous month. Excluding the farming industry, a rising trend has a positive effect on the nation's currency. Job creation is an important indicator of economic health because consumer spending, which is highly correlated with labor conditions, makes up a large portion of GDP. This report is the first of the month that relates to labor conditions. Different countries other than the US call this news release as employment changes or employment rate, but they are pretty much the same thing. The non-farm payroll or NFP is, however, one of the most volatile news releases for the Forex market. Other news releases related to the employment are unemployment rate and the weekly jobless claims. So remember, higher employment changes means higher GDP, means higher currency value, or lower employment changes means lower GDP, means lower currency value. Other important economic indicators are ISM Manufacturing Index. The Institute of Supply Management ISM Manufacturing Index measures the activity level of purchasing managers in the manufacturing sector with a leading indicator. If the reading is above 50, indicating expansion, a rising trend has a positive effect on the nation's economy. Traders watch these surveys closely because purchasing managers have early access to data about their company's performance, which can be leading indicator of overall economic performance. Other countries such as UK and Eurozone have their own purchasing manager index figures, PMI, but they are all similar to one another, with 50 being the medium, below 50 indicates contraction, and above 50 indicates expansion. So remember, higher PMI means higher GDP means higher currency value, or lower PMI means lower GDP means lower currency value. Last but not least, new home sales that measures the annualized number of new residential buildings that were sold during the previous months. A rising trend has a positive effect on the nation's currency because the housing market is a leading measure for the overall economy. And the existing home sales measures the annualized number of existing residential buildings that were sold during the previous month. A rising trend has a positive effect on the nation's currency because large purchases tend to be made by consumers that are optimistic and confident in their financial position. So remember, higher housing means higher GDP, means a higher currency value, or lower housing means lower GDP, means lower currency value. Let's talk about new releases that are related to the infrastructure of the entire economy. These news releases are actually not hot. They are pretty much ignored. But fundamental news releases are always in cycles. They will be back soon, and it's best that we get some idea on what they are. They are like current account, trade balance, capital flow, and other news releases such as consumer sentiment, consumer confidence, Chicago PMI, and Empire State Business Index, and so on. One important type of news releases that I can't overstress its importance is the speeches of central bankers. Remember that central bankers are the most important people in the forex market. They have the ability to move the market hundreds of pips with their speeches. And when they speak, market listens. Most of the time, market will overreact to the speeches. It's not easy to trade their speeches, but once you figure out what they are talking about, you will learn something that only 5% of retail forex traders know, and you will have a great advantage. In pre-news trading, we exit the market 5 minutes before the news release. We base our entry on market sentiment and fundamental trend of the currency pair. We will always trade the direction of the technical trend. This type of news trade is highly advanced, requires that you understand the market trend and market sentiment. And it's not recommended for all news events, only selected few. Remember that fundamental sentiment trading is a type of trading method based on fundamental news sentiments. As the forex market is highly speculative, strong high impact news releases are likely to move the market prior to their scheduled release. What sentiment trading is? Focus on high impact trend changing events, 100% pre-news, enter and exit before release, based on long-term trend or strong short-term pairs. Now with some basic rules. Enter at least 2 hours to 12 hours before the release. Close the trade no later than 5 minutes before the release. Follow the pre-news sentiment. With pre-news trading, market perception is everything. If the market is expecting a news event to shift sentiment, we may see a more exaggerated move before the actual release. How to determine pre-news sentiments? PPI and CPI. A high PPI will affect market sentiment towards a better CPI release. And retail sales in emerging countries such as the US makes up about two-thirds of the market. If retail sales is good, then possibly we will see better GDP. Unemployment, jobless claims, unemployment rate, consumer confidence, and retail sales. If people are losing jobs, they will not have money to spend at the retail levels, therefore affecting the GDP as a whole. Housing data and durable goods, especially also in the US, a higher housing data will have a positive effect on durable goods because more people buy new houses equals to more people buying new appliances. ADP and non-farm payroll. US ADP has an impact on the expectation of NFP. Challenger's job cuts report could affect unemployment rate. Remember also Purchasing Manager Index such as UK Manufacturing PMI, US's ISM Manufacturing PMI, Canada's IV PMI, all have an effect on the future GDP and the health of economy and the employment component. So to request information on my free and advanced webinars, please go to my website ihabjubil.com. So then I would like to thank you for attending today's webinar. We will hold following webinar soon. So please stay posted on my web pages and binary.com and hope to see you on my next webinar. Goodbye and see you next time. Have a great evening.